Good morning, everybody. Happy Wednesday. Welcome back to Daily Profit Plan. Let's get started. Let's get a screen share up and running here. And chat's open for everybody. Okay, chat's open, chat's open. Nice, nice, nice. Okie dokie. Yesterday, annoying. Market had a decent recovery. I mean, I zoomed out at the end of the day. I was bummed because what we freaking needed was, this late surge we had. We needed a little nudge to 69.30. It didn't happen for daily profit play. I had a broken wing butterfly that was okay. I actually sat through the afternoon session, 3 to 4 o'clock. I did the final hour. I was looking to see if we can get a trap in here. I was thinking, okay, well, we found a decent low here around 69.60. 75 was a trap, 6,900 was a trap, and neither of them trapped at the end of the day. And again, that's on me. If you saw the live session yesterday, I said it in Telegram for Daily Profit members. We had a chance to reduce the risk significantly. I was risking 850. I could have trimmed that risk to less than 250, 270 on the entire day. I didn't. The reason I didn't is because those traps were each offering $1,000. That was at the end of the day. I thought if I was even close within $5 or $10 of my strikes, I could probably grab 500 to $1,000 at the end of the day. But it didn't, and it didn't come back up high enough to give us a win. It didn't even come up to give us a partial loss, right? If price was at 69.22, I would have trimmed some risk. If price was at 69.25, I would have trimmed some risk. So it just unfortunately didn't happen. It kind of finished in the weakness window that I had for my trades yesterday. But where we are at as far as the overall price action, it's in the noise of this consolidation. It's all chop. So we are getting these like flare-ups and VIX retreats, flare-ups and VIX retreats. We're still looking at the same chart. Price is not breaking higher or lower. Now, we do have Google today after hours. All right, we do have Amazon tomorrow after hours. Is that enough of a Mag 7 push to get the plus side of the company to come back? Was there enough of a deleveraging yesterday with some of the software selling that maybe it's going to start positioning elsewhere? I still think that if you're in XLE, and this is not fun stuff, right? This isn't fun. This is pretty boring. But look at XLE. This thing has been on an absolute tear for a sector. This is killing it. Okay, year to date, it's up 15.5%. Guess what the SP's up? Basically zero. So XLE is out to a bold start for the year. Here is sector year to date. Not even close. Energy, materials, staples, that's defensives, industrials. These sectors are leading in a big way. Everything else sucks. Okay. So if you're looking at portfolio positioning, portfolio allocation, this is taking the cake. Now, it could come with some volatility ahead, but when we see sectors lead like this right out of the gate, they tend to stay in favor. Especially if we get through the May, June, and these are still leading the way, they're probably going to be the better place for the rest of the year. I think what's going to be surprising is how big of a performance energy might end up having. So, I mean, I have some puts. I've got some ratio spreads. I wish I was just holding XLE. It's not that expensive, right? I mean, if I were to buy XLE, I know it's out of the gates pretty hard. If I were just buy it at 51, is this 20, 30, 40% upside? Who knows? It's just a sector. I'm not 100% in it, but my gosh, it seems like a pretty smart play for what are you investing in? Scarcity. We're all in AI, but we might lack the infrastructure to actually see it come to fruition. So that's where tech is vulnerable. That's where software is vulnerable because there's so much disruption ahead. But the physical side of AI, which I said a lot last year, I would like to invest in the physical side of AI. Energy is a big reason. I mean, if you look at it right here, this is the physical side of AI: industrials, materials, and energy, by far. So for portfolio allocation, this is really wise for 2026. If you're liking U.S. exposure, energy, materials, industrials, staples is certainly more the defensive side. Is also one of the beat up sectors last year, so it's not a huge surprise it's performing better. But if the market gets a hint of risk appetite, staples will probably pause. But I still think energy, materials, industrials, very obvious rotation going on right now. So I continue to kind of want to ride those out. It's not that expensive, obviously, to participate. It's up 15%. If I was going to say, you know what, I'll take a stab at it here. If it pulls back, I'll take a stab at it here. If it pulls back, I'll take a stab at it here. 1, two, three levels. I think we're pretty safe. I mean, unless oil is going to crash to $40, and it's not all oil related. Like this is everything energy. So not a bad play. It's obviously a terrible entry to get long energy here when it's up 15.5% year to date. But I think there's more upside to go. So it might, I don't know, it might be peace of mind to know, like, look, the S&P is struggling. The S&P is a little, top heavy, and we're looking at this massive indecision. Okay. This pattern discussion is still valid. I'm telling you, like, it's not going to be fun to watch this market drop here or drop here if it does, right? Now, day to day and daily profit play, or what we built out for our for waterfall income, and even for the week to week and month to month volatility in engineered options, we have those strategies that will help us survive all the potential noise. And it's like engineered options. Here's the way I look at every trade: can the market finish the week break even or better? Can the market finish the year or the month break even or better? If it does, we'll make money, even with volatility. Okay, waterfall income, we're typically going out 10 to 15% for my strategy two to give ourselves a wide margin for error. That this is a 5% correction. This is a 8 to 10% correction. So yes, we are going out far enough that should offer us the forgiveness that we want and get the trades filled for the income that we're looking for. Daily profit play, we just have to grind the day. It's that simple. We have to grind the day. So today, here's what you're looking at for gamma. We're negative gamma below 69.30. Today, I mean, we'll see. I mean, does it come back down to 68.75 or does it rally back up to 69.80? I don't know. I think after yesterday's sell-off, I mean, plus or minus, we expected 27.85, and it was far, far, far away from that. We started the day. Here's where we opened. I'm just going to go opening price. Opening price down to the lows was 123 points. Obviously, way off, right? It was like a 5 times expected move yesterday. Now, it finished the day from the open. So here's yesterday's close. The market closed about 59 points lower, almost double. So does that mean that today should be a little bit more balanced and more efficient? It should mean that. It should. What's the wild card today? If we have another VIX flare up, this is what I mean. You can see how challenging price action is when the VIX starts at 16 for the day and goes to 20 for the day. That's a hard day. Like, I mean, and on top of that, like even my calculation, I was looking at like a 1.27 move was kind of what the VIX was showing us as far as the high of the day around 20.41, but a 1.27% move. Now, did the market close above that? From the previous day's close, the market settled about 0.85% down. Now, was that 1.27? 1.27 was right here. So the market overshot that, but this is why I use the VIX, and this is why I pay attention to the VIX, because once we established the top of the VIX for the day, I felt like that was a pretty safe low. 68.90, guess what? I had profit traps there. 6,900, I profit traps there. So, I mean, the market obviously went higher late in the day. So it wasn't by accident, but I was a little bummed that I couldn't get a better profit trap. It's fine. I was thinking, what trade would I have done? I mean, even my double up trade that I put on, if we got to 30 or 35, that would have been, a profit trap of at least a few $100. So even a profit trap at 6,900 wouldn't have done it. I'm typically not, 15. If I was 20 wide, maybe I get a couple $100, but that'd be an expensive trade. So anyway, long story short, yesterday was just a day. It was a wild day. It was an inefficient day. And if we lose on daily profit play, that's what it is. When we lose on daily profit play, it's because the market is way off. It's way inefficient. So we come back today, and my calculation, my probability is that the market's going to be a little bit more efficient today. Right? A little bit more efficient. And if it is, then hopefully we will see. I think I put this at, oops. Yep. So I've got this adjusted to 69.17. If we see the market more efficient today, then part of me wants to look at maybe an iron fly or obviously a daily profit play and see what the premiums look like. The plus minus on the day is 45.72. Okay. So we're getting a much wider area where it's like, oh, 28 today, huh? And then it goes 59 and it moved over 100 and some points. I mean, this was insane. So from open to low, market moved 120 points yesterday, nearly nearly 4x, 5x what it was supposed to. So today, at least, it gives us a little bit more of a buffer. There's no major news. We had ADP this morning. I think we had services PMI, or maybe that's tomorrow. Let's go Forex Factory. So economic calendar for ADP non-farm, 22K. There's no non-farm number on Friday. We're still in a partial government shutdown. The government shutdown stuff, the vote, it did pass, and I think the funding is now through September 30th. So right before the end of the fiscal, I mean, it is the end of the fiscal year, and we're going into midterms. So at least there's no more, U.S. shutdown drama stuff. Although I'm sure it's not equal. Like somebody's getting the short end of the stick in the U.S. government. And then we have 10 o'clock news today, services PMI. Higher, lower, we'll find out. Inflation still has been falling off a cliff. So that's one thing that's really interesting about like energy and commodities this year is because these things are absolutely ripping to the upside and inflation is falling. And that's usually not the case. If you look at 2022, even though we had a bear market in 2022 and that started late December of 2023, early January 2022, I meant December 2021. Inflation was on the way up, right? We peaked at 9% in commodities, and the energy sector went ballistic early part of 2022, but then it came right back. So it's interesting that we're having this deflation reading, and yet energy is up 15+% year to date. But again, I think that is the physical demand side of what we are trying to accomplish technologically for this massive infrastructure build. It is essentially a blank check. I think that's what's silly to ignore. It's like it is a blank check. The government's all in. It's an interest of national security. It's a global race, and there will be big winners and big losers. But as far as the sectors, as far as the theme, it is investable. Okay. If SPX loses beyond the market maker levels, how do they manipulate the losses? They roll it. It's that simple. They roll it. They roll it. This is typically why we'll see. I would say if I'm a betting man, which in trading, I mean, we're making calculated bets all day. I would say that today's plus minus at 45.72, most likely we will see even from a slightly, I mean, futures is 0.05. So we're essentially going to open up right around yesterday's close. Let's ballpark this right now, and I'll go into efficiency here. Let me see. That's a low. I'm just marking out some supports here on the downside. Let's go plus minus 40. It's 45.72 on my end. This will change. Okay. This will change if we go with a higher VIX. So right now I'm seeing 45.72 for the day. IV's up to 21, IV rank. So take the, we're going to open up just a tiny bit higher here. So for the downside, I mean, if we're going to open up higher, I can read this from the close yesterday. So let's go from here down 45, 45.72. Okay. So this line, I'll change the color here to blue. Okay. So that would be my, plus minus downside. We're going to get a slight gap higher. Let's go slight gap higher. 45.72. Right about there. So as far as market efficiency goes, that would be the day. Is we stay below this line, we stay above this line. Now that is market maker move. That's the plus minus. Now my daily profit play, I'm going to try to position down here and up here for a daily profit play. Part of me is almost interested today to come back with more of an iron fly look that I have a big profit trap, maybe a profit trap up here, maybe a profit trap that overlaps here, and maybe a profit trap here, and try to cover this market efficiency and see if I can get a bigger payout today. It's going to take some risk. I mean, I probably have to throw $200-$300 at each one of these iron flies, but if I let them sit and the market is going to have an efficient day, catching a bit of that profit trap would be far more lucrative than just a backwards reward to risk with a typical daily profit play. So I'm thinking of kind of doing combination of both. Lower delta daily profit play, lower delta daily profit play, and then look at some iron flies that kind of throw something at the middle. Okay. So I'll be very crafty on how I pick my strikes, because if I'm going iron flies, or just butterfly spreads, I guess that way I can do like calls and puts. Um, I'd like to see if I can get the market to be in a profit trap, later in the day. So if I start it early enough in the day and the market is ultimately efficient, these profit traps do become pretty large profits. So if I'm right, then that's a much easier way to dig back the little hole yesterday. I mean, I was down $1,000 yesterday. It was like 1,015, and again, that was because I had zero profit traps. My loss was as small as $270 yesterday. I was doing like at 3 o'clock in the afternoon, 3:30, 3:45. But once it slipped above like 69.10, my profit trap was gone. My profit trap was zeroing out, and all I had was $100 of a winner to show for it. So that was frustrating. But like I said in Telegram, it's like, that's on me. I decided to be greedy and try to hold it to the end of the day. So if you closed out for some fractional losses yesterday, when I said, look, if this is a good day to cut the losses, you do it. I said, I'm gonna embrace the risk. I'm gonna try to grind this out for the rest of the day. And that was my decision. Do I regret it? Partially, because obviously I wish I could have trimmed the losses a little bit, but I can't beat myself up when it's like I had, $3,000 in profit traps and not a single one landed. So that's okay. I mean, it slips. That's what happens. So anyway, Terry says, any way you can make the screen bigger for what? Hopefully not my chart. I mean, I'm not going to make the chart bigger. Is it time to load up on GLD? No, it's time to be patient on those. It's time to get your positions in. That's why I'm doing project options. That's puts, ratio spreads. There you go, Stephanie. That's good. 330, 465 loss. That's fine. That's great. Honestly, trimming the loss is great. I mean, for a day like yesterday when the market is completely inefficient and non-cooperating, when you can trim any of that loss, that is a good thing. That's a good thing. That's why I play defense. I play defense so I could trim, right? I played defense yesterday and I got a little greedy because I was like, I can play defense, have a couple profit traps. I could probably make $500,000. I had it. I had $600 of profit traps going yesterday late in the day, and I didn't take it. So, like I said, that's on me. But anyway, here we go. So that's probably going to be my plan for the day. Engineered options, we also got filled on two positions. So we have the 695, 694 XSP. We have the 691, 690 XSP. That's a 1 and 2 contract trade. So I'm looking to see, like, even if the market is going to lose one, win one, I still make money on the week for engineered options. If we have the market still just indecisive for the rest of this week, that is understandable. Honestly, I know that we don't have non-farm payroll on Friday, but this is almost setting up like the type of week where middle to late February, if this market does not break this low, and this is what's going to suck, is like all this chop, the VIX goes from 16 to 20, 16 to 20. That will be like every day is going to feel different. Okay. Anyway, you can't think like that when it comes to daily profit play. You have to trade the day. So today, what do we know? We know that we have a plus minus 45.72, right? We have a plus minus 45.72. This is roughly where the market makers would be efficient. What I'm going to look for is, could I do a daily profit play, and then maybe overlap some of my strikes in here. Okay, I'm gonna try to get some profit traps. It's going to be somewhat challenging to get them all to overlap. I tried to eliminate this weakness window as much as possible. But I'm thinking if I did, like, with volatility up somewhat, if I could do like 15 wide or 20 wide, that should cover most of this area, right? This is around 80 points or so. So we're talking, I guess that's technically 90 points. So if I either go like super wide, 50 is really wide. 50 is going to be pretty expensive. I'm throwing some, iron fly risk out there if I did like 50 wide. But let me figure it out. Maybe I can get 2 or 3 in there. As far as my gamma goes, let me see here. I mean, today would be a great day to start right where we open is where we finish. That'd be a great day to have like a big fat profit trap right around that break-even point. If we were down near the lows or we're up near the highs, which rarely does the market do that. Like, rarely does the market go to the high and stay there all day. Typically, a high is going to be hit or a bounce is going to be seen. So I think the better trade is right here at the open, put in a big fat profit trap and see if that is going to kind of hang in here for like a 10, 15 point move. Where maybe the market for the day is like plus minus 10, 15 points. And if you can grab, let's say $1,000 out of that, awesome. Okay. But the risk, of course, is if I'm doing another trade up here and another trade down here, is this enough of a profit trap to offset, this full risk? So it's like we have to weigh the total risk on the day, right? So VIX wise, VIX is at 1804. I mean, we can set a chart alarm. We're going to keep an eye on the VIX like we did yesterday. It's a moving target. So 1804 VIX, does it come back up to 19 today? I'll set a chart alarm. I'll move the VIX down to a 20 alarm. I mean, if the VIX is a moving target and we're going up on the VIX, that is going to be a day that, yeah, we might end up slipping through these lows. Okay. But again, I don't know. We don't know yet. Market makers aren't stupid. They were caught on their heels yesterday. So if anything, they should be rolling risk to today and fixing it. They're usually very good at that. Okay. Yeah, they're both XSP trades. XSP trades filled. Trades number, I think I put them in the chat for engineered options. Where is it at? So trade number 35 and 36 got filled this week. 35 and 36 got filled. So I'm filled on both XSP trades. I don't think I've had a monthly trade filled yet. Let me check my. Let me see if SPX or XSP has been filled yet for monthlies. So just weeklies on XSP, SPX, July's. Those are waterfalls. Those are all organized. Yep. So I didn't get a monthly. I'm looking for the Feb 27. I didn't get any monthly SPX trades filled yet. Not yet. Okay. So just 2 for the weekly. All right, here we go. So 926, we got a few minutes for the open. VIX at around 1806. Again, this is a kind of rough calculation. Depending on what the VIX does today, if the VIX goes up, we're going to have to monitor that. Look, even if the VIX goes to 20, okay, even if the VIX goes to 20, just keep this in mind. You take a 20 VIX, you got a 1.25% move. Okay. So if you're playing daily profit play, I mean, I would consider maybe like the bottom around like a 1.25% move lower. Okay. Again, doesn't mean it's safe. If the VIX rips up here to, 20 and change or rips up higher, I mean, that low isn't safe, but that's at least kind of a starting point where a 1.2% swing one way or the other after having an inefficient day yesterday, I think we'd be somewhat contained there. So I'm going to ballpark this thing. We've got an 1806 VIX. We'll see what happens this morning. 1806. So we're looking at a 1.13% move. We're opening up right around the same price. So 1.13% puts me down to a low of around 68.39. So that's an 1804 VIX. Okay, again, subject to change. If the VIX is going above 18, you got to adjust that target. We'll be gapping slightly up, but not by much, 0.1%. So just a tiny gap up. Then take your 1.0 or 1.13. That puts us up around 69.98. Just call it 7,000. So that's an 1804. Okay, so market makers should keep prices within the blue lines. My daily profit play, I mean, if I can pull some premium here, I'm curious, like right out of the gates, if I can do like a 7,000 by 70.10 or 7,000 by 70.15, even the 68.30 or so, like just go out of the way. If the market's going to be efficient, can I grab a couple extra bucks here? It depends on how high up I go, how low I go, and also how wide I go. But hopefully we're going to have an efficient day because of what happened yesterday. Okay. Typically that's what we have. Anything can happen. If I were to go, wide here, if I went like 7,000 by 70.15 or 7,000 by 70.20, I would be probably looking to take that partial profit versus holding it all day. Okay. Or I've got to consider playing some defense and chewing into some of the credit that I take. So we'll open here in a couple minutes. We'll figure it out. But my plan is I'm going to look for, my obviously daily profit play, see if I get some decent premium and safely put it above or below my market maker levels. And then inside the market maker levels, maybe having some overlapping butterfly spreads where I can get some profit traps kind of built in like this. Does that make sense? Where I've got some overlap, where if we have like this perfect little sweet spot, maybe there's a spot where I can make, two of these trades win, or obviously just one big winner, but low risk across the board. So that way, if we stay inside this level, I'd like to have a profit trap that's gettable. Total risk on the day, though, that you might see like that might not be a good setup at all. With a plus minus 45 or 46, I mean, we're basically having to create nets of like 30 wide. That's not cheap, right? 30 wide nets is not cheap. Or, I mean, if you went 50 wide nets, you can do two of them. It's still going to cost you probably 500 plus bucks. So, all right, let's have a look. Opening bell for today. Okay, so I've got very low deltas here. 7,000. Again, that's the VIX is going sideways. Let's see here. Gosh, it's such a low delta, man. It's all put skew. That's what's so stupid. It's all pricing skew. That's like the puts are so much better. I can go so much further out of the money on puts. Where's my gamma? So gamma up to like 80, 90. Let me see if we can get 7,000 today. So 7,000, that's a 3 delta. Good Lord. Plus minus dropped. All right, I'm going to look at like a pin here at 30. 30, 30. What's 25 wide going to cost me? That'd be 30 to 05. So there's a $500 risk to make 1,900 bucks if we're kind of pinned around today's opening bell. So that'd put me a break even around 50, break even around 20, I guess 20 bucks. So like 69.10 break even and 69.50 break even. Well, that's not a good start to the day. And what's the VIX doing? It's going up. Fudge, man. All right, can we get an 80, 90 today? Let me just take a look. So 10 delta and a 68.60. So $1.45, $1.35, $1.30. Okay. I'm going to go pretty low delta here. I wish I could pull in a little bit more credit. Okay. See if we can pull $1. I'm going to try for $1.30. All right, $1.25 I'm in. Daily profit play coming out. So I'm risking 875 to get 125. I'm going pretty low deltas. DPP. Today's the 4th. Okay. 69.75, 69.85, and I'm going down here to 25 and 15. So quite a bit wider. And we opened up around 20. Let me see if I could probably make this a pretty low risk trade. If I get the maybe 30 by 20 kind of pin price. 30 to 50. So risking 500 to make 1500. If it's between 20 and 30, that's a decent trap on the day. Okay. This is going to cost me. So I've got 20 wide. This is how the math works in this one. So if I go 20 wide, that's a $20 profit trap. Let's see, is that right? So I can make up to 20 bucks here, 20 bucks here. I'm gonna try to, I think I'm gonna take this trade. So this is about a 3-to-1 setup. If we just kind of hang out here, we opened up around 25. That would, I mean, 25 would be perfect. If we were like flat for the day, this could be a really good trade. Let me see if I can get this one for like 15. Let me go $15 credit. Got filled at 15 bucks. Filled at 15. Okay, cool. All right. I'm gonna put this trade in for double ups. I'm gonna put this trade in for double ups. So I'm doing a 60. So 6930 by 50. $69.50 call, $69.20 put, and $6,900 put, $15 credit. So $5 max risk, $15 max profit. If price hangs around 6920 to 6930 this afternoon, this trade should offer nice profit opportunity. Okay. So put spread way down here. Call spread 69.75. Son of a B. Don't hit freaking 80 today. Don't hit 80 today. Hopefully we are going to bank on some efficiency here. This is a high around 65. I'm hoping the market makers do their job today and we're not higher than 65. Also, the inefficiency here, I could see the market finding this level, but not necessarily closing above it. So keep an eye on that for the day. Okay. So the way this sets up, I'll build this out, show you how this trade looks. So this is, I'll first put on the daily profit play. So today's expiration is the 4th. We have the 69.75 by 85 and the 68.25 by 15. So that's my iron condor for the day. If price is, below 69.76 and above 69.23, there's profit. Is there risk? Yes. Okay. In addition to that, I'll build in my, there's a buy call, sell call, buy put, sell put. I bought the 50 call, selling the 70. So I'm sorry, I bought the 30 call and the 50. And then I bought the 20 and 6,900 there. Not exactly sure why that shows a dead zone. Oh, wait, this is a sell. Selling the 30, buying the 50. There we go. Okay, sorry. Now it's set up. Um, Selling the 30, buying the 50, selling the 20 there. All right, this is not taking in both trades very well. Let me get rid of the iron condor for a second. Remove, 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 remove. There. This is the trade that I just put in. So 69.05, 69.44. That's showing my break evens. So I've got about a $40 trap in here. You know, looking at this area. I mean, I've got a pretty good trap in here. So if we're below 45, we're above 05. Take a look at our price here. I mean, if we hang out around the positive and negative gamma handle, that should be in that profit trap zone, hopefully. So here's 30. There's some profit up here. So if we're 30 to 35, there's some good profit trap. It's here. If we're 20, 20 to 30, that's where this thing's perfect. So 20 to 30, this thing's worth about $1,500. Good fill on that, Ken. 165, great, man. Very good. Okay, I'll keep an eye on the VIX. I mean, if we have another flare up in the VIX, is it possible the market has another inefficient day? I mean, it's possible. Anything I put to the downside that's going to be like high reward, low risk, it has to be cheap. Right? Like if I'm going to put something to the downside here, if the VIX is going to flare up, it has to be cheap. So let's see how cheap I can make it. So lows at 62. I mean, like yesterday I put a trade that was a buck 30 to make $2,000. So that's 68.60. Maybe I could look at like a 40 trap or 30 trap. Again, it's kind of a throwaway trade, but it's there if I need it. So if it did 68, 40, 40 by 60 by 20. So that's 60 cents to make $2,000. There's some pretty good defense. Well, if it was 60 cents, let me see if I can get in here for. I mean, I'd throw away that trade for sure. So 60 is, so yesterday's low is 60. We come below that low, give myself about 20 points of wiggle room. So 60 is not filling. Just got filled at 50 cents. All right. So I've got a 20 wide trap for 50 cents. That's good defense to have if I need it. That also covers my put side on the daily profit play. Up here, probably going to look at a put around like the 7,000 handle. Could I go 7,000? This is going to be a bit more expensive, so I'll play with the numbers here: 70, 20, and 80. Cost me a buck. Let's move this up. Move this up. Get some defense. So let's see if we can get in here for like 80 cents. So that's 20 wide, 20 wide. Price isn't invalid, you idiots. If I buy, sell the 5, Buy the 25. Okay. Get a couple of traps here. Okay. All right. It's going to be an interesting day. So I'm doing a profit trap up here, which covers me from 69.85. Change the color here. This covers me from 69.85 to 720, 7025 in case we have upside risk. That cost me 80 cents. Okay. Downside risk is at my daily profit play low. So I have some defense on daily profit play. That's what this is. This is all defense up here for 80 cents. Okay. And then I have my, kind of my mid price, which is a modified iron fly. And I have my defense down here as well. So is there a perfect trade in here? Well, obviously no. It's like I'd have to stack up like more stuff in the middle. But basically I have upside protection, downside protection, and a pretty good play in the middle if the market's going to be ultimately like a nothing burger today. So if we hang out between 20 and 30 for the day, that's worth $1,500. Okay. So to make this simple, everyone that's in the chat today, here's what I'm gonna do. I'm just gonna type in the Zoom chat. I'll get it in the services. I'll get it in the trackers and stuff. But here's my day. I'm typing this in Zoom right now. So SPX 2-4 expiration. I have the 75.85. So 69.75, 6985, 6825, 6815. That's $1.25 credit. So this trade needs price to be greater than 6825 and less than 6975. So $1.25 profit, risk 875. That's trade one. Next trade, I'm going for the middle. So a kind of a 0 to 10 point, we'll just say like a stall day profit trap. I have SPX, and this is an if. I don't know if this is going to happen, but 2-4 expiration. I am selling the 69.30, buying the 69.50, selling the 69.20, buying the 6900, $15 credit. So 5 max risk, 15 max profit. This trade is pinned between 6920 and 6930 late today or into the close. And then my top trade, the top trade is, I put it in with puts, so I'm not overlapping. This should be a 1-2-1. It's a butterfly. So I'm buying the 6985. I'm selling the 7005. I mean, that's 20 wide for 80 cents. Like that is pretty sweet to have if we're even remotely right on a profit trap. That was 80 cents debit. So 80 cents max risk. That's 19.20 max profit. This is a profit trap from 6986 to 7024. It's not two. They're all 2-4 expirations. It's not. It's a 1-2-1. That's incorrect. I'll show you. I'll find this in my broker platform. Watch. It's a 1-2-1. I promise. Sometimes the activity here will show the wrong contracts. 6985. So the 6985 put is 1. The 7005 put is -2. And the 7025 put is +1. So it's a 1-2-1. So there's my top trap. I get my daily profit play, 6975 call, 85 call. Then we have the 6825 put, 6815 put. $7,585 call, 2,515 put. This is my daily profit play. 30 and 50, 20. This is my iron fly. This is my bottom trap. All right. Let me do the bottom trap here. So bottom is a 2-4 expiration. I'm buying the 6860. $6,840, $6,820, or 50 cents debit. So 50 cents max risk, 1950 max profit. This is a profit trap from 6821 to 6859. Okay. So when I say profit trap, what that means is for every, so the perfect price, if you can see my chat here. So the perfect price is 6840. All right. But for 21, because my trade only cost me 50 cents, my break even price is 6820.50. So if I'm at 21, I've got a $50 profit trap. If I'm at 22, I've got $150. 23, $250. If I'm at 6830, okay, if I'm at 6830, that is going to be max profit of 1950. Here's how you calculate this at the end of the day. So let's say I can have a max profit literally pinned at 6840. That gives me exactly $19.50. So 1950. If I cash settle today at 6830, just say 6830. If I cash settle at 6830, take your full profit at 6840. Let's say we settle at 6830. That's $10 off. So subtract 10. That trade will pay me $950. So I'm not in the perfect pin price, but because this is a 20 wide trap, I've got 40 points. It only cost me 50 cents to get that trade. Okay. So anyway, for today, because it was a little aggressive, I'm just throwing all the trades in Zoom. I'm not going to do this every day, but because I'm kind of blending services and tossing a couple trades out there, I want to see what the day gives me. Now, my hope for the day, this is why I'm doing it like this. Typically, when I see a market being inefficient, the next day it tends to be efficient. Okay. So I'm putting that in like my, you have the coin flip theory where every day is, well, you have the same probability of being heads or tails every single day. In the markets, I don't think that's necessarily as true. I think we have a bit more of an edge when the markets have an outlier type day or an inefficient day. More than likely, we're not going to have 2 of those in a row. Now, could this happen? Sure. Right? Could we don't go down again today? Sure. But for my day, if price is going to hang out in here, I have a potential profit trap. If price is going to try to break the lows, I have a potential profit trap. If price is going to break the highs, I have a potential profit trap. For my daily profit play, I just want to see the market maintain an efficiency day. All right. So I have, if we stay basically in the middle, I have a $1,500 profit trap. If we break the lows, I have a $1,950 profit trap. And if we break the highs, I have a $1,920 profit trap. So potentially, I could line up a pretty profitable day by just getting one of these things right. Now, is there risk in this trade? Of course, because we can slip to the downside here, slip to the upside here, and I don't get a profit trap. I still win maybe, one daily profit play for $125, but then I'm down 50. and I'm down 80. So I'd basically wash the day, right? So there's risk on the day. But if we're going to stay inside this blue line and we're going to hang out around, hopefully this like, pivot point, this is what I was like kind of look for is like 69.30 pivot. Perfect. If we hang out here late in the day, that should be decent. And my goal is if I have daily profit play and profit, and I have this center iron fly, it's kind of a modified iron fly. If I have that centered and this is paying me, let's say, $500, then I can take maybe 50 to 100 bucks out of the daily profit play, add this to an iron fly, and then who cares about these? I can throw them away, and I'll still make 400 to 500 bucks on the day. That'd be a pretty good day. Okay, if I wait later in the day, this one's worth up to $1,500. So by 3 p.m. today, 3:30 today, if we're hanging out around 30, 35, 25, 20, that's a pretty good looking profit trap at the end of the day. All right. So for everyone here, and that's why I put it in the chat. So look, you can, if it's confusing, then don't take the trades. Just be a spectator, right? I'm not asking anybody to take trades you're not comfortable taking. I want you to understand what you're doing, right? If you're in the trade with me, here's what we need to have happen. Let's break it down one trade at a time. Okay. So I will summarize this right here. We have a daily profit play entry for $1.25. Okay. Let's do a summary here. Daily profit play entry 125, which means my risk is 875. What needs to happen? I need price to be less than 6975 and greater than 6825. Okay, that is a wide area for the iron condor. So probability of profit, these were both single digit deltas. There's a pretty good probability that that stays safe today. If that's the case, I'll make 125. Okay, if you got filled at 160, 150, great, even better. So you're taking on less risk than I am. You've got an 840 risk for a 160 profit. That's awesome. Okay. All right. I have the center. It's kind of an iron fly. It's modified. It's not exactly an iron fly, but that's the concept. So anyway, entry was $15 credit. My risk is $5. What needs to happen? I need price to hang around 6920 to 6930 today. Because this was a 30 by 50 on the call side, 6930, 6950, and then a 6920, 6900. So 20 and 30, because those are my sell strikes. That's where I'm getting the most premium. That's where this thing is optimized. That's my profit trap. So if it hangs out, I mean, and technically it's like if it hangs out at 69.15, I still make money. 69.35, I still make money. But it's better if we're between 20 and 30. Okay. Then what else? Top butterfly. Entry was 80 cents debit. Risk is 80 cents. Max profit could be up to 19.20. What needs to happen? If we break highs, price between 6986 and 70, I guess 701, 7024. What are my strikes again on that one? Let me find it. 80, so 86 and 24. Yep. So ideally, it's like between 86 and 24, that's a profit trap. But preferably, we'd say like I'd say 6995 to 7010 for that would be like $1,000 or better. Okay. So if we're at 6995 to 7010 today, that's a big fat profit trap. So it cost me 80 cents. I can make up to $2,000 on this trade. Is again, think about this. It's a trade-off. Is price going to break above 7,000 today? Probably not. So is this a high probability trade? No, that's why it's cheap. But if we do have a run to the upside, it helps me offset the risk here and play some defense. Okay. And I've got one more. This is my bottom butterfly. Entry was 50 cents debit. So risk is 50 cents. Max profit would be 1950. What needs to happen? If we break lows, price between, I would say ideally on this one to the downside. If we're at 6825 to 6855 area, that's $1,000 or better. Okay. So this is how I have the day surrounded. This trade is the highest probability, but I have to take on more risk in order to see that high probability, right? When I took this trade in, it was probably like a 5 or 6 delta. Like on paper, that's about a 94% chance of profit. Could I still lose on the trade? Yes. Is it likely to lose? No. So that's why I get less credit, more risk because of the high probability. Center fly, it's probably like a 50 to 55% profit opportunity. So I paid a little bit more, but I actually turned this into like a, there's an asymmetry here. I can get 3-to-1, right? So this is 3-to-1 reward to risk. If we break the top, if we break the highs, which would have to be an inefficient day again, this one pays, it's ridiculous. I mean, I'll just do the max profit here, but if I get paid $1,900 out of an $80 risk, I mean, that's 24-to-1. 24-to-1. It's insane. If I get 1950, that's 39-to-1. Okay. Now, what's the trade-off? Extremely low probabilities. This is probably like a 10% probability, maybe a 10% probability. So that's how you're rewarded in option trading. You want high probability. You're going to take on typically way less risk. I'm sorry, you're going to take on way less credit, more risk for high probability. 50-50, I mean, the nice thing is I can turn roughly a 50-50 trade into a 3-to-1. If we hang out around that sticky, like positive, negative gamma today, I could be fine on that trade. VIX at 19, so we're climbing up in the VIX. We're going to keep an eye on this stuff today. Okay, so price is going up or price is going down. I have some, very high reward scenarios here if the market's going to give us a bunch more direction. But the day is not done. Okay. No, Perry, they're correct because, and that's why I use SPX because there's no cash settlement. So there's no assignment risk, right? I meant to say it's all cash settled. There's no assignment risk. The reason I use the calls and puts is because that way I can trade however I want. It works the same way profile wise. So even though the upside is puts, it still treats it like a profit trap, just like it would be if it was a standard butterfly spread. So it doesn't matter. There's no assignment risk. These are cash settled. So what I'm doing is I'm trying not to overlap, right? See how I have my strikes here? These are my call strikes for daily profit play. So I'm putting in puts over here. It still works the same way. It's still a profit trap. There's my butterfly spread, and there's the top of my iron condor. That's what's nice about trading SPX. There's no assignment risk. Okay. So the top butterfly is all puts, but they're higher prices, right? It's all 7,000s. The bottom one is all calls. It doesn't matter. It's a profit trap. There's my profit trap. That makes sense? So with butterfly spreads on SPX, you can make them interchangeable. All I need price to do is get into the trap. If they get into the trap, they pay really well. Okay? So that's what I'm looking for, is that they get into the trap. Now, to be fair, what happens on is, so let's say that I did this one on the bottom side. If I did this one with puts, if I did this with puts and price is falling, then my profit trap has a better chance of paying me versus being in the profit trap at the end of the day. Okay. So there is, there's a saying like, I like to skate where the puck is going. If we start here, let's say price is hanging out right here. Use a different color. If price is right here and price is rallying, well, if I have all puts up here, I'm not going to get paid the same way. Okay. If I have all puts and price is going up here, I don't think that's actually, that might not be true. Let me check. Usually you get more benefit if the call fly, like if price is here and I have a call fly profit trap, this tends to pay a little bit better as price is going up into it. But either way, it's like the put premiums will still increase because we're getting closer to the money. You go from an out of the money position and price is getting, closer to at the money or in the money, then you typically see that premium increase, which is what we want. So let me show you here. I'm going to go, let me just delete this one. Let's build out a iron fly, or I'm sorry, just a regular butterfly. So I'm doing the put butterfly. Remember, I put the put at the top. So I am buying the 85. I'm selling the 7005. And then I'm buying the 25. There's my trade. So look at what happens right now. If price goes up, okay, if price goes up, I should see some ramping up in profit well before I hit the profit trap. That's kind of nice, right? So my exact profit trap getting, this debit now shows like $1.15, but the reality is it cost me, 80 cents to the upside? Cost me 80 cents. So if price does go higher, what's nice is look at the left side of this graph. So my trap, it actually widens out early in the day. So if price is going to rally up, I could see, if we're at 69.50, 60, 70, I could see some decent profit in here. But at the end of the day, it's based on the exact profit trap levels. And then you take my debit, which was, 80 cents. So the nice part about the flies is early in the day, you can widen out the trap because you have time in the trade. Later in the day, the trap gets narrower and it goes right along your strikes, but you still have your, big asymmetry here. Okay. Yeah, they're all posted in the chat. Steve, if you can look up, can you see the Zoom chat history? So here's the summary of the day. Here, I'll just do this. This will be easier just to list it out. And again, I'm not going to do this stuff every day because I usually don't trade like this kind of aggressively, but I'm taking a stab today of, this will be daily profit plan, February 4th. So this is going to be like a inefficient recovery plan. That's essentially what I'm doing today. Okay. So I have the trade for today's bottom. That's a high reward to risk. I have the top of the day, which would be a high reward to risk. I have my my sideways day, which is kind of if the market's going to stall. And we kind of finish around like where we opened and where we hang out around that positive negative gamma. That'd be my stall profit trap. So I'll go here. Underscore to separate the difference between this trade and the next one. So here's my bottom, there's my top, and then I have my daily profit play. Daily profit play. Okay, so this is my all right. So you can see the screen. These are my trades. Do I need to put all four of these trades on? No. Right? The best thing for me to do today, honestly, is here's price, here's the market maker move, and then we do a daily profit play, Sell calls above, sell puts below. Price stays either inside the market maker move, and we make a full $1.25. Easy peasy. That's probably the best thing for me to do today. Okay. Now, why am I trading more aggressively today? Well, because I didn't hit any profit traps yesterday, I lost $1,000. My goal today is if I can hit a winner here and maybe get a winner here. This winner could be anywhere between 100 to an extra $1,500. Or if we break lows, I have defense that pays me up to, I guess technically it's around $1,900. And if we break the highs, I have defense that pays me up to $1,900. So again, I'm giving myself an opportunity for maybe a big winner, maybe a decent/big winner, and then the high probability daily profit play, which is what I expect to win all the time. Okay. So I'm going to try. I'm going to try, throw it out there, give myself a chance, maybe grab a winner today. Okay. The bottom trade. Yep. I'll show you. So let me just double check here. So I have daily profit play, bottom trap, the modified iron fly, and then the top trap. So max risk on the top trap is 80 cents. Okay. Max risk on the bottom trap, I paid 50 for it. Right now it's already up $50. And then my daily profit play is, up a couple bucks. So, and if we have a move, let's say for the day, I can look at all these trades. There's time in these trades as we're early into the session. If we get a big aggressive move into my bottom trap, this might be worth $200 or $300. If across the board I'm seeing that I'm up like $200 to $300, I might just take the profit, and then I'll have to sit here and wait and hold this thing all day and get lucky. You saw yesterday, it's like I had good trades, good traps, so I thought, and they all slipped through my fingers at the end of the day. So, realistically, if I'm up $300, $400, $500 on the day, I'll probably just take the profit, And if I look at it in hindsight and it's like, oh man, I could have made it. It's fine. But if I lost 1,000 yesterday and I can make 500 today, I'm doing my job. I'm chipping away at those losses, and maybe in the next 2, 3, 4 days, I'm back to black. The goal is I'm just trying to put trades together to give me a chance to win and keep taking good trades. So right now the bottom trap is, let me see what that was. So I got filled for 50 cents. Right now it shows it's trading for like 85 cents, 90 cents. So it's going to be a bit more expensive. It's still though, you're paying 80 cents to make $2,000. So is it a good trade? Yes, it's a huge reward. Okay. But is it going to get there today? It's probably a throwaway trade, honestly. If I'm just, from experience, with an inefficient day yesterday, it's probably a trade that's going to lose 50 cents, 75 cents, or $1, whatever you throw at it. It's probably going to be a losing trade, because I don't think price should settle here today. I don't think that price should even be getting here today based on what we calculated this morning, which is this is the expected. Okay, this is the market maker plan, is just have volatility today. We have a plus minus 45.72. Let's see if the markets will just stay inside of the market maker move. So it could be an absolute chop fest today, and that's actually perfect for our center, because I have a trap that looks like this. If we stay between 69.20 and 69.30, that's great, because that's worth $1,500. And I still win my daily profit play on top of that, which adds another $1.25. Okay, but the day isn't done. VIX at 18.51, we're not done. Right? So we had a spike up here to 19.19. Is that going to be, the high of the day on the VIX? Well, we'll find out. So chart alarm at 19, 19.21, chart alarm at 20 on the VIX. I think we have to monitor this stuff. The VIX is not messing around. 1921, we're looking at maybe a 1.2% move. Okay, so take your opening price, which is right here at this dotted red line. Your opening price, we open up a little bit higher. I'll take this and go 1.2%. Okay, if we accurately have a move at 1.2%, that's how far we're going to go down today. That'd be around 68.35. 68.35. Now, do I have a profit trap in that zone? 68.35. Guess what? I have a profit trap there. because this is pinned at 40. So if we're at 35 today, that's worth $1,500. Okay. I've got a fighting chance. If it stays in the expected range, I've got a fighting chance. Okay. So the day is just beginning. Let's see what happens. Now, my goal. So this is my goal. It's like I don't love putting these trades on, and then I'm like, well, I'm just going to hang out all day, and then at 4 o'clock Eastern time, I'll manage this stuff. No, I mean, I'm going to watch this because if this trade and this trade and this trade and this trade across the board, if I can see $300 today, $500 today across the board net, I'll take the profit. You know, yes, I have big fat profit traps, but I'm not trying to be greedy here. You know, I greed was a perfect story yesterday. I got greedy, wanted to trap profits, and ended up letting, you know, $800 slip through my fingers. So I'm not trying to be greedy, but if I can profit across the board, great. I profit across the board. It chips away at the loss from yesterday, and it takes me only a couple days to get it all back. Losses happen. You know, yesterday's loss could have been way more manageable, but that's on me. So today I'm going a little bit more aggressive. And what am I banking on? Well, I'm banking on the market's efficiency. You know, usually we don't see the market have a terribly outlier day, like a terribly inefficient day, and then come back the next day and stay terribly inefficient. Right? Usually it is inefficiency followed by market makers blow out the expected move, which is what we saw a little bit more today, plus or minus 45.72. Remember, the VIX calmed down, right? The VIX calmed to like 17 compared to a 20. So anyway, I mean, the jump from like low 16s to 20 was a huge intraday rip on the VIX. But I'm just looking to see, I mean, if you're going to take away one lesson from today, it is, I think that the markets today will probably stay between this blue line and this blue line. And that's what I hope for. Because if they do, I have a chance to grab some profit in here. I have a chance to grab profit on my daily profit play, and I throw away the top and the bottom, and hopefully I walk away with net profits. Okay. All the trades are right here. Here's the notepad for the day. Take a screenshot. Okay. So inefficiency. Here's my bottom. Here's my top. Here's my stall in the middle. Here's my daily profit play. That's the day. Will I do this every day? No, because I'm not going to trade this aggressively every day. Right? I'm a little annoyed at yesterday. So I'm gonna try to give myself a chance to have some profit traps on the day and try to grab a slightly bigger profit than I usually do. Right? Usually I'm pretty happy, like daily profit play, especially give me 100, 200 bucks. I'm happy. You know, give me a profit trap if I can find a good one. I'm obviously happy anytime I get a profit trap. Yeah, I mean, it's a very light revenge trade. But you know what it really is I think the markets typically in an inefficient day, they bounce back with efficiency. The expected market or the expected move and the market makers kind of blow open the volatility, and we typically don't see a lot of price action. So I'm hoping that's the case. And you know, to me, it just stays inside those blue lines that we talked about. How does the stall trade lose? If the price is greater than 50, so if we're greater than six, let me find the stall trade here. So stall trade, if we're greater than 69.50, and if we're less than 6,900, that's how it loses. Okay. So if we're inside of this, if we're 69.45, 69.45 to 69.05, I cover my costs and I've got all profit trap inside here. This is the sweet spot. So if I'm inside here, I'm getting, 69.06, 100 bucks, 69.10, 500 bucks, 69.40, 500 bucks. The perfect price is 69.20 to 69.30. That's the perfect price. That's worth $1,500. Okay. Why did I select that strike? Why did I select that area? Because of this starting point. We opened up right around 30. Okay. So if we can hang out here at 30 being a big pivot level, great. From 20 to 30, I've got a profit trap. and that's perfect. If we stay above 69.05, awesome. If we stay below 69.50, awesome. So it is a pretty decent trap. It's not perfect, okay, but it's pretty decent. You're setting exit orders? Not yet, because the asymmetry of those trades, having higher reward. I'm just going to keep an eye on them. So right now, this top trap is down, almost max. I'm down, max 80 cents. I'm down 70. Well, there's not much I can do there other than just maybe we get lucky to the upside, but doubtful. Right now, the center trap, like the stall trade, is going to take some more time, but this one has the most potential to, if we're hanging out at 69.20, 69.25, 69.30, this one has the best potential, like later in the day, probably at, 2 in the afternoon, 3 in the afternoon, to offer up maybe $500. And then late in the day, like 3:30, 3:45, if it's hanging out at the same prices, it's worth $800, $900. And then perfect trap is, 1,500 at the end of the day. Daily profit play, because I'm taking on the most risk on this trade. If I get this one trading down to like, 80, let's say it's trading down to like, 45-cent debit. So $1.25, if it's down to like 45-cent debit, 35-cent debit, I'll probably just take the profit. Give me $80, give me $90 out of the max 125. I'll just take the profit. And then I'll see if the traps can actually offer something up with a big profit today. Chuck, let's see here. I made a big mistake, got filled on the 6985 put side with a 7005 sell. All right, let's break that down, Chuck. So what happened here? 6985 put side. I need, just tell me the exact strikes. Yep. Look, I get it. I mean, we got a big room today. I know it's a lot going on. But hey, you're trading with me. Suck it up. Let's do it. Okay. I got filled on the 6985 on the put side. So double check that strike there, Chuck. I'm not sure what the 6985 is. That put side would be this one, right? So that should be a buy. Okay, so here I'm going to say this is for Chuck. So for Chuck, it should be a buy 6985 put, sell 7005 put with 2 contracts, and then a buy 7025 put with 1. So it should be this. That was the 80-cent debit. Okay. So are you in that trade? That's what you have. So what's the issue? If you have that trade, that's an 80-cent debit. That's the most you can lose. So if price is not 6986, 6987, 7,000, if price is basically not inside that profit trap, that whole thing is a profit trap. So price is not in that zone, you're going to throw 80 cents away. Can't fill the other two. I mean, you can. I just don't know. I mean, they're not up a ton of profit. Like this modified one's up $20. So instead of $15 credit, you're going to get $14.75 credit. You're just changing the. I mean, the strikes are fine. You're just going to have to pay a little bit more for it as far as less credit, which means slightly more risk. The bottom trap is probably a bit more expensive. It's up $50 on my side, so you'll have to pay $1 for it. That's the only difference. So you can still get filled. It's just, it might be, okay, the bottom trap debit might be a little bit more expensive. The modified, center trap or the iron fly, it might be like 1460, 1475 credit, maybe 1485 credit. Like it's going to be close. Okay. Change the chat to, yeah. So yeah, I feel that, yeah, if you're in the chat, again, this Zoom chat is open for everybody. If you want to post comments and stuff, you can also send it to everybody so we can all see it. That way the chat's open and live, so we have, like a community chat every single day. Okay, good. Okay, worst case scenario. Glad you asked. What's the worst case scenario? Let's find out. Okay, so what happens if price is way up here? What happens if price is way up here? I lose. But is price going to rip? I'll show you the probability of profit. So My profit trap goes up to 70.25. Okay. I will show this is how I kind of plan out a day with this is why I love options so much because we have probabilities. So the probability of price going above this 70.25 strike. Okay. There is a 1% chance. There's a 1% chance that price is beyond my top trap today. 1% chance. Okay. How about below my 68.20 trap? There's about a 4% chance. And my daily profit play, about a 5% chance that I take on risk on those trades. So I'm talking about a 96% chance that, this trade would still be safe. It'd have to obviously come into this zone, but there's a 96% chance that it does not go below my 68.20 strike. And there's a 95% chance that my put spread on my daily profit play is going to stay in full profit today. Those are good probabilities. Okay. How about in the center? The center trade, we're trading around 20. I want price to stay between 30 and 20. That is worth $1,500. It is, like I said, about a 50-50 trade, right? We're sitting in the middle. You know as well as I do, the market for the day could be 50-50. It could also be a big nothing burger. So if I'm going to bank on a 50-50 trade, this gives me about a 3-to-1. Based on how I built the trade out, I have a 3-to-1 opportunity. Could I have made it 4-to-1 or 5-to-1? Sure. But then I would have a little bit less space on my wings. So I'm just going to hang out and see if that kind of nothing burger day is going to work out really well for us. Because if it does, we've got good profit opportunities. Okay. So worst case scenario is prices way up here. There's about a 1% chance of that happening. Or worst case scenario is prices way down here. There's about a 4% chance of that happening. Prices in the middle. Well, there's a profit trap. Now, this could still create a loss. Okay, there's a bit of a weakness window there. This tiny little sliver here could create a loss. Okay, so I could lose $500 right here, but I still make $1.25. Okay, and that would offset it. So I'd still be down on the day, but that is the price I'm willing to pay to have these bigger asymmetric profit traps. Right? So basically, I'm still willing to risk like $300, $400, $500 today to give myself a chance to make $2,000, $1,500, or $2,000. If we're even remotely close on getting one of these right, hopefully we're walking with net profit on the day. Okay, Aurora's in all 4 trades. It's a good practice to bracket the butterflies with OCO limits. Are you talking about getting into those snapper or getting out? I mean, if you want to set them for a limit order, like get filled where I got filled, that's fine. I mean, if price is going to start going down towards this profit trap, it's just going to get more expensive. Getting out, yeah, sure. I mean, on the day, it's like, what's my total risk on the day? Okay, so I'm risking 875 and 500 and 80 and 50. So if I am wrong on everything, I'm risking $1,500 on the day. Right? Now, there's about a 1% chance of that happening. So I don't think I'm going to lose $1,500 today. But for that $1,500, there's a profit trap opportunity. There's a profit trap opportunity. There's a profit trap opportunity. And my little tiny daily profit play. So I'm risking $1,500 to potentially make one trade. Could help me get a full profit. I've got $5,600 of potential. It's not going to be, you can't get all credit today. But if I'm risking $1,500 on everything and I get one profit trap for $1,500 or $1,900, the way these trades will stack up is I should have a net winner on the day. If I can get a net winner, that is really what I'm going to do to manage the day. Daily profit plays up, $15. Okay. The bottom trap is up 10-ish. The modified iron fly is up 25. This gets better later in the day. The top trap is, back and forth. It's, up and down. But where's price at? Price is at 69.18. I know where price has to be. I know where I need price to be. So that's all I have to do is monitor. So what's going to catch my attention? Well, if price breaks this low, I should probably pay attention to it. Because for the day, if price doesn't do anything today, guess what? My iron fly trap, this one, is going to be best later in the day. If price breaks the high or breaks the low, that's probably where I need to be, paying attention. So I'm going to set a chart alarm here at 80. I'm going to set a chart alarm here at 60. And if those don't go off at all today, then that means I have my iron fly in the middle and a daily profit play that hopefully we can grab some profit. Right? So my guess for the day, and we can test this theory later today, my guess for the day is that this is my best opportunity to make profit would be that kind of stall trade. That's my best chance. On top of that, if I can win here, let's say that I can win, $500 to $1,000 today. It maxes out at $1,500. So I'm saying something that's manageable is maybe $500 to $600 on the day. And on top of that, I throw in a daily profit play for a win of maybe, $100 out of a max 125. So for me, if I'm up $500 or better today, I'm probably going to take the profit. A little bit more, that's fine. Okay. Otherwise, I'm going to hang out late in the day and figure out if I can nail a profit trap for, the $1,000+ Okay. All right. Why do we do the DPP if others pay so much more? I'm not sure what's that question, Stephanie? Why do we do the DPP if the others? Well, because what's the trade-off? The daily profit play is you trade off. You get high percentage wins all the time. It's more risk, but what are you trading? You're trading super high probability. If I'm going to take something where I'm going to make win 90% of the time, the market's not going to pay me 3-1 to win 90% of the time. The market's going to pay me $1 for every 8 risk, 9 risk. That's how I make 90+% of my trades win. That's the trade-off. Okay. So that's what I really fell in love with the options is like, my gosh, every trade you take, it's like there's a pro and a con. There's a trade-off. It's fair if you want high probability. It's fair if you want high reward to risk, but it's efficient. Like at the end of the day, it's efficient. That's what we're trading. Okay. Gloria, I see that there for new members. Thanks for posting that for everybody. Total newbie. Yeah, look at the comments from everyone, right? Super fast and intense. Like I know it's trading, but here's what happens when you're with me. We do this stuff every single day. You can always ask me questions. I'll always answer questions. If you stick with me for a week or two or a month or two, I have had traders. How many old school traders do I have in here that have been following me for the last 10 years? I have traders that have known me since 2008. And they're still following me. They're still with me, whether it's currencies and robots or trading options now, running trading rooms. I've been doing this stuff for a long time. Okay. So Larry says 1 year and you're the best. 12 years now for Greg. Wow. I know. That's crazy, Greg. That's awesome. Learn the base options first. Yep. I agree. Newbie. So look, if we have newbies, let the whole community tell you, are you in the right place to learn? We're in the right place to learn. We're in the right place to earn. We're in the right place to trade. And look, I'm not going to dumb this stuff down for you. I will make it simple. But I'm not going to dumb it down for you and be like, no, this is too advanced. Nothing is too advanced. All we are doing is trading up, down, sideways, right? All we have to understand when we're trading is if I place this trade, what has to happen, right? When I place all of these trades, what does it mean? That's what I'm trying to get you to. That's what I'm trying to teach you, because this trade means something. Is it a perfect trade? No. But if I get this trade to cost 50 cents and I can make up to $2,000, that's an awesome trade. But what has to happen for that to give me that profit? Well, price has to fall. And if it falls in between 68.60, 68.40, 68.20, I've got a good chance of making a lot of money on that trade. Right? So it's just understanding when we build this stuff out. I know for a new trader, this is really intense. But when we craft the trade in the markets using options, all we are expressing is I need price to go here, stay here, go here, whatever. What am I doing? up, down, sideways, right? And it looks fancy and it might seem intimidating at first. But all we're doing is if the puck goes here, we can make money. If the puck stays here, we make money. If the puck goes here, we make money. Is there still risk on that? Yes. If it goes way up here, I don't have enough. I mean, I'll have to manage, but I mean, again, it's a 1% chance that I'm dead wrong. It's a 4% chance I'm dead wrong. I know this right now that the probability is super low that we're going to be wrong to the extremes today. So what I'm looking at is, can I trap, can I get a trade here that pays me with price staying in a range? That's my daily profit play for $1.25. Can I get the, modified trade in here that pays me up to $1,500? I got to hold this to the end of the day to get $1,500. But if it can pay me $300 or $500 in addition to this $100 or $125, that to me is a good day. It's probably the easiest way for me to manage the trade is we get a decent chunk on the stall trade. We sacrifice, and we keep. So if I can win here and win my daily profit play, I'll let these run. In the worst cases, I lose $1.30. But if I can make $500, $600, $700 combined and even throw away the $1.30, I'm still happy on the day. Right? And again, I go back to this. Why am I taking this? Why am I taking it down this crazy journey today, this adventure today? Because I am looking at the market, maintaining an efficiency that it lacked yesterday. This is how we know that market makers are good at their job, because they can afford to have one stupid day, but they can't afford to have 2, 3, 4 in a row. Okay. So one stupid day, I'm not trading overly aggressive, but I'm taking some stabs at the market today. So I would love to see this. I'd love to see the plus minus 45.72 today. I'd love to see the market not even come close to testing one of these levels. And that is a perfect volatility crush by market makers to say, hey, everybody, look, volatility is going to be crazy high. And the market's like a plus minus, 15 today. So this is what they put into the options market. Hey, everybody, it's going to be a crazy day. And then the plus minus is like 10 to 15 points. That would be great, because they sucked here and then they fix it the next day, because they can't afford to let price do this. They can't afford to let price. They really can't. They can't afford to let the market slip like that day after day. So I'm going to bank on that a little bit today. All right. Okay. Blake, I hope you're seeing all these comments. These are all pretty awesome. Donna, that's great. Is there a time later? Yep. There'll be a time later for sure. I can either do a video update or I'll run a closing hour session. I think I can't be here until the closing minutes today. My fiance is going to have to leave. So if my kid wants to hang with me for 15, 20 minutes with you all in my video, I'll do a live session. But more than likely, the easy thing is I'll either send an update and I'll send it to like my public Telegram, right? So today, I'm going to give everyone, let me see if I can just build a quick thumbnail here. What do you want to call today? Market wisdom? I mean, it's wisdom if I'm right. It's like this guy took crazy trades today and lost. I don't know. I'm probably not going to lose today. I'm kind of banking on some efficiency, so I'm hoping that's right. But let's just see. I'm going to build this thing out for like gold nuggets. I need a thumbnail. Okay. All right. So we'll throw this in Telegram. Let me catch up on some comments here. Roy, you got me now, though. That's good, right? So you've been following me for a long time. I mean, that's spans almost 12 years ago. In the right place. I see that a lot. Drinking from a fire hose. I get it. And look, if it was just a teaching session, it's not like this, right? If it was just a teaching session, it's not like this. This is trading. Zero DTE is pretty intense. Okay, it is. I mean, you can make the decisions clean, like, oh, this is a simple trade for zero DT, but it's all or nothing. So what am I trying to do today? I'm not trying to take a trade that's all or nothing. I'm trying to take a trade where, you know what? I've got a plan A, but I've got a couple other plans to go with it. And maybe I can help win the day. So if all these combined can help me win the day, WTD, win the day. If I can win the day, I'm happy. Okay. All right. So I will, I'll make sure we have some follow up on this trades later. Thanks for the encouragement. Hang in there. Good. Teach us how to fish. Yes. Yep. I've got a lot of, yeah. So if how many of us are still new? I've seen, I mean, we had like 270, 280 this morning. If I still got some new traders hanging around, a good place to start, and this is what we've been doing a lot here. A good place to start. I've got some fantastic foundational education. If you are a member, Engineered Options, I give you my full course. If you're a lifetime member of Daily Profit Play or Waterfall Income or Newsbreakers or Double Ups or Pinch Point or Project Options Edge, I give you this full course. This is it's a 13 strategy options course. I sell it for $500. I give it to you as a lifetime member in my services. I give you as Engineered Options. Here's one place to start. This is a 70-minute session called One Trade Mastery. I'd say this is a great place to start. If you're new, I'd love for you to just embrace option trading for what it is. It's up, down, sideways, and it's a calculated bet. I know where I'm right. I know where I'm wrong. I know my probability of profit. I know all this stuff before I ever exit or enter a trade. That's the best thing, right? You're taking a calculated bet. And the best part is we're trading a market that typically has a bias to the upside. So if we just stay bullish, we have a house edge. This is why traders make money. If you stay bullish, we make money. Yes, in the zero DTEs and the trading every single day, there's noise. We're not going to win every day. It's very, very challenging sometimes. But my service is here. Okay. 89% winners daily profit play, 94% winners waterfall income, 97% trader winners on Project Options Edge, 85% pinch point, 71% newsbreakers, 78% right now in engineered options. Double ups is 60%. We're winning trades. We get the job done. Okay. So there's that. There's all these testimonials. It's awesome. Like, read these comments. Again, Sharita, if you post that for everyone, that's great. Right? You posted it to me. Chris, the best I've been with him 16 days, almost made 3K. That's fantastic, man. Don't be afraid to send that to everybody. Third program, good. Okay, sounds good to me. Market reflexation. Revenge trades. Yeah, we'll see. I'm just going to do this. We're going to go gold nuggets. It's kind of what it is. So let's go to downloads. All right. This will be my thumbnail for today. I don't want people to think like he's trading gold, but it's just market nuggets. It's real trading, it's real teaching. We're in the trenches, we're doing it every day. This is what I do. And I have done it with this energy and this pace for a decade plus, teaching other traders. I've been in the markets for 26 years. So I look, I love the process. I think we're basically putting a puzzle together every single day. It is the most rewarding and also the most challenging. But I embrace that challenge, and I'm pretty good at carving out profits. Even I was prepping my tax stuff these last couple of weeks, and the tax hits a little bit hard from a good year last year, like it always does. But what was kind of nice was when I went through my spreadsheet, and I'm thinking I probably had 75 or 80% of my trades last year 60 40, 60 40, 60 40, 60 40, 60 40. So my tax burden is probably reduced to like 21, 22% versus 34%. Typically, trading like this is all short term, but when you trade indexes, SPX, I had so many trades in SPX, it's like I probably reduced a lot of that tax hit. So anyway, it's just trading. Just trading. Okay. Very nice, Maria. Awesome. For sure, Ken, no problem. What percentage of the account do you run? Good question. So David's asking, what percentage of the account do you run those? So I typically take those trades. So Project Options Edge to me is best served with a margin account because my buy power is usually way under control. Let's use it. Let's use an example here. Um, let's see, chance of assignment versus account balance. Yeah. So chance of assignment here. I'll give you an example. Chance of assignment on all these trades. Here's let's see. I was looking at this account yesterday because I've chewed up a little bit more buying power than I really wanted to. But here is, so I have some shares of Alcoa. That's an ETF. That's a ratio spread. Chance of assignment about 10%. So would I take the shares? Sure. If I take the shares, I'm going to own them for I don't know, $44, and the thing's trading at 207. So chance of assignment's about 10%. AMGN ratio spread chance of assignment about 10%. Amazon chance of assignment about 8%. Okay. So again, in an options market, you have to think about this. This is one really important thing with option trading. The market efficiency. Okay. Market efficiency. And again, the market's not always efficient. There's always some crazy stuff, right? There's outliers. There's all sorts of wild and crazy crap that happens in the market. Market efficiency. Market efficiency is based on 1 standard deviation, even 2 standard deviations, and even 3 standard deviations. Okay. All this means is one, and somebody can correct me on the math, but I'm pretty sure a 1 standard deviation should be about should be about a 67 to 68% distribution. 2 standard deviation is like 93%, and a 3 standard deviation, I can spell that right, is like a 96% distribution. Okay. So what this means is if we have our overall, gosh darn it, my Epic Pen annotation tool is not working. Give me 1 second. I hate it when it flakes out on me. Epic Pen, you are going to be ended. Now let's open it up again. It is. It's waterfall income, Gloria. Waterfall income. Waterfall income is right here. Waterfall income. Waterfall income. 95%, 94.5% winners. So it's higher win percentage, slightly lower reward to risk. Example, I'm risking, 450 to make 50. I'm risking 4 to make 1. But I also have, and you've learned this in the classroom, hopefully, my strategies I'm producing also have these profit traps for my strategy 2, where I could risk $400, but make $1,500. So even though it starts out initially with a higher risk, we actually have these profit traps built into one of my strategies. So there's a chance we could actually have a win that makes up like 3-4 of our losses. I mean, it's one of my favorite strategies, period. I will trade waterfall income forever. Like if I have a new client, they're trading waterfall income. If I'm managing, my own millions of assets, I'm trading waterfall income. It's such a good trade. It's such low risk, and you build these profit traps in there, and you just plan on market efficiency. So anyway, that's waterfall income. That's what you're asking. All right, back to this. So here's the drawing tool. So in a normal distribution of results, okay, the market tends to have this big fat middle, and that is roughly going to be your 1 standard deviation right in here. So what that means is pretty much everything that's priced into the markets, okay, about 70% of your trades, just less than that, but just about 70% of your trades, all will be like market efficiency. So of, let's say, thousands and thousands and thousands of trades, most of those trades are going to fall. If you put on a scatter plot here, you're going to have most of your trades will all fall in the 1 standard deviation. Does that make sense? So basically, market makers are not stupid. They have to do their job. There's always going to be outlier type movements. One stock is crazy bullish, one stock is crazy bearish, one sector, one index, but indexes are so efficient. 2 standard deviations, we're talking way out here. It is so difficult for the market to go this far on the left tail and go this far on the right tail. And when it typically does that, there's usually a big reflexive rally or reflexive bounce. So guess what gold and silver had been doing? They've been pushing the upper limits of these standard deviations to the upside, and they were breaking like all these efficiencies, which is why we had a crazy pullback. 30+% correction in silver, 20+% correction on gold in a day or two because the market got so overextended. 3 standard deviations, you're even closer here. Okay. Now, what does this tell us? Typically, what we see in almost all of our trading results is that if we're trading within a 1 standard deviation move, we should see most of our profits realized a majority of the time. So I'll ask you this. If you can set up good reward to risk profiles, if you can go do 1-to-1 and have a 67 to 70% chance in all your trades, is that a pretty good strategy to have? Fantastic strategy to have, right? When we get to the outer standard deviations, like the 2 and 3, where it's like the probability of profit is so high, this is why the markets reward us for less credit, but they reward us for the probability of profit. So daily profit play, this is why I said like it's one of my favorite daily strategies because the markets don't do stupid stuff all the time. The markets very rarely do stupid stuff. So this is where we live in daily profit play. The market would have to do like a 2 to 3 standard deviation move for us to really lose. And so we survive where most of the time it's efficient, which is what I'm kind of banking on today is we have an efficient market today. If we do, hopefully that pays us really well in the middle. Okay. Does that make sense? And this, like, I'm not trying to make this boring with option stuff, but this is what option trading is. Like options, it is like the math behind option trading is sophisticated. But the reason I love trading options so much is since 1973, it's created this efficiency and this stability. And yes, it provides leverage. It naturally provides leverage. You can control, 100 shares of something for 1 contract, and it's way cheaper to trade options. It's way more capital efficient, way more cost effective, but there's risk because you have to get it right in time. You have to get it right with price and direction. All these things are factors that we have to consider. But from this sheer market efficiency standpoint, outlier moves can happen. Okay. Example, does anybody know how many standard deviations 1987's crash was? I'm missing it. Sorry, I'm like catching up on these comments here. 67.5, 95, and yeah. So I'm within reason. Okay. But even still, I'm catching up on comments here. Waterfall Income just joined. Okay. I've got all the comments now. So the Black Friday or the Black Monday crash in 1987, Black Monday was a 20 standard deviation move. Okay. So even if you think for a second, I've got this market all figured out, you have to remember this market can do something so wild and so crazy and so irrational that if you are risking a ton, even with a 99% chance of profit, you can still lose absolutely everything, which is why I trade the way that I do. It is risk-defined trading. I want to eliminate the outliers, okay? If I have an outlier type move, I can lose a standard risk amount. But if I have an outlier move, I do not want to get blown up, right? And the one thing that scares me, and I love Tom Sosnoff, I love Tasty Trade, but the one thing that scares me is they have been teaching, naked strangles, and they work. I know they work. Okay, I've seen them work, but every person that's made a lot of money on them has also experienced terrible drawdowns. And it's not because you're a bad trader; it's because the market did something silly, and that's not fair. That's not fair to have tens of thousands of dollars in gains, and the market does something silly, and all of a sudden you're in a 30% drawdown. And you're going to spend months repairing what could really be a risk-defined trade. So the trade-off is instead of, yes, I make way more money if I'm naked strangle, naked strangle, naked strangle. All that is that you sell a call, you sell a put, and there's no risk defined trades. And you're banking on this, you're banking on market efficiency. So it works great. And you take in a ton of profit and you manage it aggressively, and it's a whole strategy. But an outlier move like April 2025, an outlier move like July, August 2024, an outlier move like 9 months of trading in 2022, an outlier move like March and April in 2020, an outlier move like December, January 2018. I'm listing a lot of these outlier moves. They seem to be way more common. So that's why I don't like to trade them. I don't want to deal with a drawdown because of an outlier event. I want to have cash at the ready, and I want to be able to capitalize on those outlier events. Okay. So my trading style is boring. I just take lots of trades. I will take lots of trades, lots of stabs, lots of base hits, lots of swings, and I eliminate the outlier. If I lose, I'm annoyed. I'm always annoyed, but I can always survive, and I can always come back and trade the next day. So that, in a nutshell, is how I trade. Okay. Stephanie says, I worked for a mutual fund in 1987. I was lucky to be on vacation that week. Is that mutual fund still in business? Crazy, right? Let's see here. I know someone who made and lost £1 million in 4 days at 19. Wow. Yep. And what's crazy? I mean, we glamorize the movie Big Short, and it's a great movie, right? I think it's one of the, for me as like a trader, it's a great movie. But what is interesting is diving deeper into that whole story of there were prop firms, there were hedge funds that were short on the housing crisis since 2006 and 2007. And it all happened in 2008. Well, guess what? They didn't do. They didn't survive to get the Big Short, right? And that's why, taking a risky all-in bet to me is so risky. It's so risky because if you are wrong, you will never live to tell about it in a good way. You'll just be another shop. I listened to a podcast last week, and this guy was like, he bounced around from like 4 or 5 shops. He had terrible trades and a terrible track record. And he's still producing like a Substack, and he's still doing analysis, and he's still doing deep dives. And I'm like, but you were a terrible trader. Your firms blew up, and you're still doing this. So it's like there's all sorts of ways to survive. But my gosh, I don't want to blow up my account. My accounts have grown for 20 plus years, and they're finite. I don't want to give it back. So yeah, and you got Burry. It's like, yeah, Burry's got of the game, and that's been the big like headline the last 6 months is famous Big Short Michael Burry. He's called 50 of the last 2 crashes. Yeah, he's not a hedge fund guy anymore. His fund is under 100 million. He's delisted. He's probably just running a family office with whatever it is now. So he's registered, probably still managing money, family office stuff, maybe his own capital, whatever. But yeah, it's like his narrative is he's crazy short. And this market does not have to be irrational. Logically speaking, yeah, the market should go down because we've got all these things, but the market has done what? Climb the wall of worry, go to all-time highs, and probably still has all-time highs to get to. And if you give it time, it wants to get to all-time highs. If you give it time, the market wants to go higher, right? And what we're discovering now is this whole idea that, the fiat system and the debasement trade. Well, for every percent of weakness we've seen in the dollar, we essentially see a percent of gain in the S&P. So even if it's going to help you break even, you can at least maintain some preservation of capital and some type of purchasing power that keeps us from falling behind. And to make this whole thing go full circle, that is also why the K-shaped economy is so vicious for the people on the bottom end of the K. If you're on the bottom end of the K, it sucks because you have little to no capital invested. You're not benefiting from any asset appreciation, and your purchasing power is going less and less these days. Right? The dollar is devalued. Things are more expensive. They have been certainly more noticeable the last 5 years. And that's why the bottom of the K is so angry. And that's why this year's midterms will be really interesting. Anyway, this is trading. And I don't know if this is too complex. It's not complex. This is just most of the time the market is efficient. That's the whole point. Most of the time the market's efficient. And when it is efficient, great. We make a lot of money. All I'm saying is when you trade the high probabilities, Trade it with defined risk. Trade it with defined risk because there will be the outlier move. There will be the occasional outlier move. And if you're caught on the wrong side of it, it is so painful because the market typically stays in here, right? And this is the way you think about it. Most of the time I make money, but when I lose really big. I never want that to be my style of trading. Okay? Because I want, even if I lose, I want the occasional loss, but it's like I still want to manage that risk. I have to manage that risk. Because it would be incredibly frustrating to have a trade like this. I make money, make money, make money, make money. Oh my gosh, outlier move. Okay. Now, you know how you got it. You know that the market's when it's, coming back to efficiency, I make money, I make money, I make money, oh my gosh, an outlier event. These type of episodes are so frustrating to be a trader because you do it all right. You make lots of money. It's super, you think you got all figured out, but the market has a way of humbling you like nothing else. Okay. And that's obviously like if you're lucky to stay that trajectory. A lot of people, they do this and then they see this and then they give up. They don't realize that they did all the right things making this money. It's like you can still do it again. It's just you got to have the grit to come back into the market and do it again. And that's the hard part. So I'm trying to cap this, cap it, cut it off. If I'm wrong in an outlier, I survive it. Never let this market take that away from you. Okay. All right. Thanks, Eric. Appreciate that. What's the risk in the stall day? So it's a $500 risk today, Dave. $500 risk today. Okay, where's the market at? Let's go. So we're at 69.07. Okay, 69.05, 69.07. Here's my efficiency on the day. So as we wrap up this trading session, Blake's going to put a session together for waterfall income for you. I will play that in just a couple of minutes here. Look, are we maintaining efficiency today? Yes or no? So far, yes. So far, the market's maintained efficiency. Great. Where do I need it to stay? Well, ideally, I want it to stay, 69.05, 69.10, 69.15, 69.20. I mean, this is my profit trap. So for it, 05 to about 35. That's where I'd like price to stay today for my center trap. Okay. Nice, Mark. Good. Nice winner. Let's see here. So Roy, when you say except when they crash below their entry position. Right. But if you trade defined risk like I do, that's a survivable crash. An outlier event, we survive because we have defined risk. That's pretty good. Okay. Or like you do in Project Options Edge, where if we have an outlier event, we're assigned something, it's like we're repairing it. I'm going to have shares on Chipotle. I'm repairing it. I have shares on Pfizer. I'm going to hang on to those and get the dividend and also repair it. I'm trying to think what else we got assigned. I got to sign some IBITs and Bitcoin. I threw in a 22% covered call. So even though Bitcoin is down to some fresh lows again, it's a 40% drawdown peak to trough. Hopefully with a 20+% discount already at a 30% drawdown. I mean, I'm covering most of the drawdown. So as long as we don't tank much further. So anyway, I've generated probably closer to 50% premiums, and we're down about 40%. So I'm not necessarily net down on Bitcoin, but it's a frustrating trade. I had over $700,000 in profit last year that turned into like 590 by the time the year was done, just because Bitcoin sucked. So I mean, I gave up a little bit of alpha at the end of the year because the Bitcoin's drop in October. It's fine. It wasn't like closed gains or anything. It's like it was unrealized, but I was up in Bitcoin and then it gave it all back. So I was essentially a wash on Bitcoin for the year, and now it's in the red. Right, I gotcha. Okay, good. So I'll wrap it up here. Blake is going to play a waterfall income session. I will keep an eye on this for the rest of the day. I'm going to be here. I'll be in the chat answering questions. I'll have another webinar coming up around 12:30 today as well. And if you'd like to join me for a little golden nugget segment today, let me see where I can find that here. Nope, that's that. Where's it at? I will have a little golden nugget segment later today. I might be live. I might have my kid rolling around the ground while I'm here, but I'll try to get a final hour session. Whatever I do management wise, I will post everything in my public Telegram today. Okay. So remember, for today, if we're going to maintain some efficiency and price stays around here, great. If it's in between the blue lines, great. I've got a decent profit trap by this afternoon. If price breaks fresh lows, VIX is up to 19 and change. So we're going to have the VIX going up again to spike above 20. Well, guess what? If it does that, then we might be flirting with the bottom end of this efficiency. It still has to close below it to be inefficient for the day, by the way. But if we get below the blue line and we push down into this fresh low area, we have a profit trap waiting for it. Okay, we have a profit trap waiting for it. So here for the day, if price makes fresh lows, okay, flip the option chain around. My 25 by 35, it's still, this is my daily profit play is my 25 by 15. There's still a 90% chance that this is going to stay in full profit for the day. But if we break the lows at 68.60, which are the lows yesterday, if we break those lows, this is a $2,000 profit trap that costs us $50. So that is a source where we can maybe grab some profit. So the bottom trap is now trading for $120. My daily profit play is up 25. So I mean, I'm net positive on the day. Like this trade's down essentially $80. This one's down 20, but I'm up, 130. Okay. So I can grab a small profit on the day, but I'm not that interested in a small profit today. I'm interested in, can I make a winner here? Can I get a trap that gives me maybe $300, $400, $500? That's how I plan on managing the day. Okay. All right, Blake, when you're ready, dude, let's fire up Waterfall Income, and I'll be live. So Waterfall Income now, Waterfall Income at 12:30. And I think I'm going to be on Waterfall Income at 3:30 today as well with Build a Trade with Nate and Kane. So I'll be active today. Come join us in that Build a Trade, because that's a good spot and a segment for, like I said, these golden nuggets. Cool. All right, Blake, we're ready. Let me see. All right, I'll hang out. If you want to set some chart alarms today, I've got the chart alarm set below the lows at 60. I've got a chart alarm set here at 80. I know that my daily profit play, we have the 75. So 75 is my call strike. And we did 68.25. 68.25. Yep. So 68.25 is my put. 68.25. So that's way down here. There. So as long as price stays below, if it's below this blue line, right, below this section, and it's above this top line is market efficiency, but above this blue line is my daily profit play. So if we're in here, we have profit trap, daily profit play. If we're in the middle, that's fine. Between 15 and 30 would be great. 69.15, 69.30 would be great today. Let's see if the gamma, I'm hoping that we stick around like this 69.30 zone. I'd love to see like a big fat like glue at that 69.30. That's why I chose that strike. Okay. Patrick, you're very welcome. Good stuff. Stephanie says, I made rectangles on my profit traps. I get it. That's what we do. It's nice to have that stuff. Okay. And is there a chance the market's inefficient today? Sure. There is that chance. Okay. But the market inefficiency, the VIX is going to have to probably rip above 20 plus if we're going to go inefficient today. And if we go inefficient, well, based on the opening price, which was right around here, okay, opening price at the dotted line, if we go inefficient and we drop today, I mean, this profit trap for us would be, the market could fall 1.4% and we're right in the sweet spot of a $2,000 profit trap. The market could fall I'm trying to think here. We did 60. What were our strikes? Bottom trap, 40 and 20. So, if we're dropping to 68.40 today, That's an if, but if we drop to 68.40 today, that's a 1.2% decline. So we have some room, and the VIX would have to just keep staying elevated. So, all right, Blake, let's fire some waterfall income, and
Let's do it.
I'll be live like several times all day today. So come back and join me. Look at some updates in Telegram, and all right, I'll be here answering questions with Blake.
All right, sounds good. Just want to give a shout out too. Thanks everybody in the chat for all those wonderful testimonials. So feel free to put those in there anytime. We really appreciate it. Here we go.
Much appreciated.
Absolutely.
143 trades. Results: 97.1% win rate, 17% average return on winners and losers, with an average hold time of 11 days. Every weekly windfall targets roughly $1,000 in income based on a 5K risk in every example we talked about today. Again, it's important you understand, yes, we're talking about $5,000 examples. Okay, you're getting about 15 to 20% return on that risk. You can scale that down, scale that up. You don't need $5,000 to take these trades. Today's risk that I took on, $450 risk, is the maximum risk for me. Okay, and that trade could pay me up to over $1,500 in profit. So anyway, we'll talk about that in the classes. So from September of 2024 to current, so this is an update. We should have 126 winners because we did have a trade close out at the 1:30 expiration, which had been last Friday. The 124 live trades. So I'm pretty sure we have 126 live trades, live winners at a 94+% win rate. 16% average return. That includes winners and losers with the average hold time of 12 days. Again, we cannot guarantee any specific future results. There's always risk in trading. You know that. You trade, you sign the disclaimers, all that good stuff. If you want to check out terms, conditions, disclaimers, check it out on our Prosperity Pub homepage for more information. All right, final thoughts here. We get this. It is trading. Trading is a game of winners and losers. My goal is to win more than I lose. My goal is to win bigger than I lose, and I make money. So when we take losers, we understand there's no black box miracle system that prints out winning trades automatically. The whole purpose of my trading, the whole purpose of my research and working with traders just like you is to give us an edge in the markets. If you are not comfortable placing trades and potentially taking on risk and losing a trade, then you need to take a demo account. You need to be paper trading. You shouldn't be trading with real capital. This is risk capital. So losses will happen. I just want you to make sure you understand that. But when we're winning 94% of our trades, we don't lose very often. So we trade with a lot of confidence. All right. Appreciate everyone being here today. My name is Chris Pulver, and thank you for joining. With nearly 30 years market experience, I hope I don't look that old, but I've been in the markets for 26 years now. Trade everything: stocks, options, futures, forex, cryptos. More than 10,000 hours spent trading and teaching. I've been doing this for a long time. I've certainly seen a thing or two. What did we see this last week? One of the biggest single day moves ever in gold and silver. What did we see last year? One of the biggest single sell-off peak to troughs, and one of the nastiest volatility swings. We've seen COVID and bear markets and bull markets, right? What's happened the last few months has been pretty alarming. So I think this is where the gold and silver mania started to happen. Governments around the world have become pretty reckless. So this happened, late last year. China's printing 5 trillion yuan, and they're basically doing it to prop up the real estate market and also backstop their stock markets. At the same time, the Eurozone coming out of nowhere to finally do some fiscal spending, and they put together a $1.1 trillion spending package on defense. They're also reliant on energy sources from Russia, which is also a huge plaguing thing for the Eurozone. And meanwhile, good old US of A. Government debt is skyrocketing with no signs of slowing down. We have a partial shutdown right now. We had the longest shutdown in history last year. The government just continues to spend money. If we have the Supreme Court rule that tariffs are unconstitutional, well, there's another $500 to $600 billion that we're going to have to come up and make up for, or just keep spending and run our deficits even hotter. So point is, does this lead to an inevitable outcome? Second wave of inflation? Possibly. Nobody wants to experience this. I certainly don't want to see this day to day. I don't want to see the loss of our dollar purchasing power. And this second wave, I think after dealing with this persistently since 2020, when everyone had this on, everything's more expensive now. Everything in life is more expensive. If we go up again, and we potentially have a mild hyperinflation, it's not going to be pretty. It's not going to be fun. So if you care about your family's financial future, and I know you all do, as do I, then I urge you to pay close attention. Because not only is this new income technique going to help us handle the rising cost of living, but by the end of this broadcast, you'll get a chance to join me. What's hopefully going to be, says 117th winning trade. We got to be at 119, 120 as far as winners. Anyway, I'll change that later. So before we get started, I want you to think about this for a moment. When it comes to risk capital, would it be nice to target right around $1,000 each and every week? Sure, why not? Who wouldn't like $1,000 every week? Okay. Um, it's one trade, it's one ticker, and it's the same time each week. So it is like clockwork. And I'm being literal. Like, I mean this. One trade, one ticker once a week. What happened on Monday, March 4th? Anyone placed a trade with me in Waterfall Income around 11:59 a.m. Shut the computer down and checked out for the rest of the week. Sure enough, when everything worked out, we had 1144 on that 5K risk just a few days later, automatically deposited in our broker account. The following week, Monday, March 11th, just like clockwork, again, right around noon, a few days go by, trade would have automatically closed out for you for another winner, 1186 in income. Very next week, March 18th, rinse and repeat, 1297 in income on that 5K risk. And of course, the final Monday in March was no different. Same day, same time, same ticker. Week 4, 1150 in extra income. Even though the stock went down, we still made money. Got right around that 20% return on risk. So altogether, that's 47.78 in profit, almost $5,000 in profit during the month of March. And that's one trade, one ticker at the same time each week. Now, I call these weekly income payouts weekly windfalls. And they've shown the power to pay us even when the stock market goes up, down, or sideways, we can still get paid. This is one of the silkiest, smoothest equity curves that I've ever seen. This is a 12-year test. If I could trade it back to 1973 when options were created, I would. I don't have that data, but I'm pretty sure that what the market has done is continue to make all-time highs. I would put the strategy up against anything. I love the strategy. So 97.1% success rate. So what does that look like? Well, if we've got 100 trades together, we've got 97 of the winners. We're right there, right? We're doing that for real. So numbers like that, I think you can see why I'm excited to share this with you. And in just a moment, I'll reveal why this trade takes place every Monday at exactly 11:59 a.m. Eastern time. But before we go any further, I want to be very clear. There's nothing guaranteed in the markets. There's no instant income magic pill. So understand that this technique is not about gambling on home runs because it's not a home run trade. This is a base hit trade every single week, like clockwork for income. So it's a realistic approach that is designed to help us have an opportunity to target steady income on a weekly basis. It doesn't matter if you have a multi-million-dollar retirement account or if you're just starting out with a few $100, okay? Anybody can learn this technique. I'm happy to teach you. So a standard brokerage account, permission to trade options, internet connection or connection to your broker app, and just a couple minutes with me live on Mondays at 11:30 a.m. or just a couple minutes to see my alert that gets posted in your classroom. You can take the trade and follow along just a couple minutes each week on Monday, same time, same place each week. So obviously, I'm trying to make it as easy as possible, but if it's not easy enough, don't worry, because you'll also be able to take the trade live with me every single week. All right. The trade that I put on today, hopefully will be again, I'll check the numbers on this, but 117th winning trade out of 124 trades. I'm showing in my tracker up to like 138, 139 positions. So anyway, I'll double check with the team on the updated results since we did have trades that had closed out on the January 30th expirations. But nevertheless, the trade is in, trade is valid. I like the trade. I'm giving myself a 10.5% room for error. I can make up to $1,500 on the trade, and my maximum risk for me personally is about $450. So give us a chance to target, $1,000 hands free. If you're comfortable risking 5K, 10K, 20K, 50K, or $500 or $200. I'm not the one to tell you what you should be putting on trade size wise because that's you and your dollars and percentages. Okay, I know what I'm comfortable with, and I teach this every single week. So that perks your ears up, then stick around and welcome to Weekly Windfalls. I've been in the markets, like I said, for 26 years now. I personally manage 7 figures. Right now, I'm sitting up around like $5.1 million. Options. I love the options market. It is one of my favorite ways for the last decade to generate income with owning 0 stocks, right? I don't love owning stocks. I like trading around them for income. So anyway, that's what I do. On top of that, I trade live with students every single morning. We have a very active session every single morning, Monday through Friday. And you can come in and get some touch points on all these services that I run, see how we grind out for the mornings as well. And we are doing very, very well. So some of my top followers making a killing here. Here's Ken, first month with me, 16 wins, 1 loss. Chris is great at coaching, explaining, managing risk, does it all each live every single morning. Here's Kathy, full-time trader nowadays. Kathy with the account size managing and making up to about $1,000 a day on average. Kathy just confirmed that last week as well. So still going strong. Here's Randy. I've had over 200 wins and 92% win rate. Learning a lot in the process as well. Here's Lynn, took a 4K account, used this, one of my strategies as a growth strategy, and turned 4K into almost 20 grand in just a couple of months. It's awesome. So I'm revealing a brand new technique that maybe you've never seen before. And again, the trade I took on live today is valid and still available. If you like it, you can get it as soon as, I don't know, the end of this webinar. So before we dive in, it's important to remember that this is not a get rich quick button when it comes to trading. In fact, there is no such thing. This market will humble you like nothing else. So please understand that when you place the trade today, if you take the trade with me today, be smart. Think about the max risk. Think about the profit. Don't over leverage yourself. These trades are designed to help grow your account over time. So that said, your timing for this brand new briefing could not be any better, because I think that it's no secret that nearly everybody, young or old right now, is a little strapped for cash. Inflation, persistent inflation, life is more expensive. Prices have been higher. They've been going up at like 4 to 5% every single year for the last 5 years. Stuff's more expensive. Okay. The price of literally everything has gone up. So I don't know anybody that's staring at life right now thinking like, yeah, life just got cheaper. It hasn't. It's not. This is what we're all dealing with, and it's not fun, right? So many Americans right now barely afford to save any money at all. Check out this. This is a personal savings rate. It is plummeted. People are just living on home equity right now. People are doing all sorts of stuff just to get by and maintain a standard of living. So we're putting less than a tenth away of what we did a few years ago. Credit card debt at all-time highs. Okay, we're over $1 trillion in credit card debt. You know, the buy now, pay later stuff is very scary at some point for some type of consumer debt bubble, if you will. You know, topping $1 trillion for the first time in history. It's a scary problem that most people are facing right now. You know, if you got to take on credit card debt to, you know, save your dog at the vet, or any unexpected expenses, this is not fun. You know, surprise your loved one with a gift, whatever you want. I mean, unfortunately, a lot of people are trapped with credit card debt, and we get that that's the worst kind. It's the worst kind of debt to have. It's predatory. I don't know how it's legal, but that's exactly why I'm here today. I'm on a special mission, unlike anything I've done before, to show we got a big room today. So I'll show 150 people, 200 people today, exactly how you can offset the rising cost of living by targeting, you know, whatever income you're looking for with me on Mondays. But let's say $1,000. If you're willing to risk 5,000, make $1,000 every Monday, all by placing one trade, one ticker at the same time each week. Back in April, okay, you have $5,000 to play with. That's the amount I'll be referring to in every example today. So we'll talk about that at the end as far as risk and reward. Now, you don't have to invest that much. You can take these trades for as little as a couple $100, as little as $100, in fact. April was a big shakeout in the SP. This is April 2025, April 2024. Funny, it was the same thing. Most of the markets took a huge hit that week. Watching the portfolio, this was April 2024. The market was down 5% that month, by the way. April 2025, the market was down as much as 15%. Yikes. And we still made money, by the way, in April 2025. In fact, pretty much every asset sold off during the month of April. S&P down 5%, NASDAQ down 6%, Bitcoin slipped double digits. Even safe haven bonds were nearly down 10%. Almost every investor would have lost money, at least a few $100, probably to the tune of thousands of dollars, at least in a drawdown. But folks taking advantage of these weekly windfalls would have fared much better, because they would not have hit just one time, not just twice. But guess what? Every Monday you traded with me in April, we had a winner in weekly windfalls. $1,054, $11.66, $16.39, $11.53. That's over $5,000 made in just the month, while most people are staring at red in drawdowns and losing their shirts. And again, this is one trade, one ticker, same time each week. Okay, let's do some math here. The average household pays around $6,100 per month in living expenses. That's just to get by. Okay, just to make ends meet, just to cover necessities. We're talking, healthcare, food, clothing, gas, electricity, right? Maintaining your house. The median annual household income is around $75K. So let's look at the math. That's before taxes, so that's gross, not net. So tell me this. This is where the pinch is. This is where the K-shaped economy is getting worse. Household expenses on top for $73K, gross income $75K, right? So how are people keeping up? Mathematically, they're not. It's tough to save for retirement. Forget about the dream vacation, the dream car. Things are getting pushed aside right now. Cash is simply way too tight for a lot of folks. But with windfalls, we could have known that, we have extra income available every single week. And if this helps, that helps fill the income gap we desperately need right now, let's get it. So also, I've said this, trading, in my opinion, is one of the best side hustles in the world. You don't have to get a second job at Sam's Club, Home Depot. You don't have to drive for Uber. You don't have to drive for DoorDash, right? No overnight time or overtime hours, not working weekends. Learn how to trade. I'm telling you, it's the greatest side hustle in the world. Keep in mind that the extra $5,000 in April would have come during one of the worst sell-offs we had for the entire year. We're live, Sean. Every major index, Bitcoin, even bonds were in the toilet. Now, of course, I can't guarantee any future returns against losses, but we know this. Like, this is trading. The markets can be unpredictable at times. But as these type of set of returns, it gets me excited about sharing these weekly windfalls with the world. In just a few minutes, like I said, the trade that I took today with all my members, you could be lining up for that 117th winning trade, and hopefully there's some income coming your way. One trade, one ticker, same time each week. Just like happened the first week in May. We had winners in March, winners in April. Here's winners in May coming our way. S&P endured a month-long sell-off in April. We had a nice little recovery rally in May. So if you're a buy and hold investor, you're a 401 holder, guess what? You're back to break even after being down heavy for a month and then back up to break even. Now, if you're in the weekly windfalls with me, take advantage of this every single week in May. We had another 4 winners in a row. Not too bad. There's 1150, 1209, 1101, and 1672 in income for the month of May. That's over $5,000 in extra income going 4 for 4. Again, another week trading with super confidence, another month trading with super confidence. And that is how our silky smooth equity curve looks. And that is also, you might be thinking like, well, Chris, we've been trading bull markets the whole time. Not true. Okay. We've had 7 corrections in the markets of over 20%. We've had 7 in the last 10 years. And that's still what our equity curve looks like. So even with the market literally going up, down, sideways, we can make money. And that's with legitimate bear market scares. We still make money. Okay. So if you're twice as confident in the method, you want to invest twice as much. Sure. You can have an extra $10,000 in income, 5 figures in a single month. Now, people aren't strapped for cash because you don't want to save money. I get it. We all want to save money. We all want to make money. Everyone knows how important it is to beef up a rainy day fund and have some emergency funds set aside. But everything in life has gotten more expensive. We are now on 5 years of persistent inflation that everyone feels, and life is more expensive, and it's becoming very, very difficult to save money. In the last few years, correct me if I'm wrong, you've probably seen this in your own budget, right? A new car payment jumped up from $450 on average to almost $750 a month. That's a huge increase, nearly $300. That's crazy. You add that with a 50 to 100% increase in car insurance. What the heck, man? Like, transportation is expensive. How about the price of fruit at the grocery store? Largest annual increase since the 1980s. So it's not just car payments and grocery bills that are skyrocketing. The average mortgages, I mean, come on. We have literally the most unaffordable housing market we have ever seen in this country based on what it takes to buy a house. It is now like 6 times salary to buy the average house. It used to be 2. Okay. This house was, $1,600 mortgage payment. Just a couple years later, it almost doubled. Same square footage, same house, same neighborhood. Somehow that price is worth more. I don't know. And dollars, yes. And gold, no. Right. Hard fact is, this is only beginning. I don't think that the Fed is going to save us. I don't think that Trump is going to save us. I think that this is a reality that is brewing in the background that we have to figure out how we can offset, potentially persistently higher inflation or sticky inflation or our weakening dollar. So if prices are going to continue to go up or persistently stay more expensive, we have to find ways to offset that. So this is the 1970s over 2020s. This is a pretty scary chart. I mean, this is what happened when we had inflation running hot for nearly a decade. There's a spike up and then a calm, and then we had a second wave that lasted years and years and years and basically crushed the economy. Now watch what happens if we overlay the 2020s. We had that huge spike up to 9+% inflation. We've come down to 2%-ish, right? That's our Fed's target. We keep being told it's that, but remember, even at 2% inflation, which is the Fed's target, that means that prices are still going up by 2% a year. Things aren't getting cheaper, right? So I just think that people are sick and tired of inflation. So it's a big deal. So what comes next? Well, if we have higher inflation, maybe it's in a commodity space, right? Maybe oil is going to get more pricey. Then pay at the pump gets pricier. Then gold and silver had their crazy run that they've just had the last 12 months or so, and they just kind of crashed on us the last 24 hours, 48 hours. But if this second wave hits, it's going to be awful, right? Sends the cost of living even higher. Some economists suggesting we could see up to like $20,000 or more added expenses every single year. Nobody wants that. I hope nobody has to deal with that. But if we could offset that crap and make some money and grow our accounts and stay with the ever-rising cost of everything, well, we're not falling behind. How about that? Doesn't that feel fine? Let's offset it. Let's make enough. Let's have a surplus. And we do this every single Monday. One trade, one ticker, same time each week. Anybody can learn this technique. I see a lot of familiar names in the chat that are members of mine. You can do it from anywhere and do it anytime. As long as you have access to any regular brokerage account, permission to trade options, you can do this on your laptop, on your tablet, on your phone, on your broker app, just a few clicks of a button. And you can target whatever income dollar amount you're comfortable with each and every Monday. It's just risk and reward. That's all it is. What came next June? We had the big sell off in April, but we still made money. We had the rally in May. We still made money. We had a continuation in June. We still made money. There's another 4 for 4 in our weekly windfalls. Okay. Another month without a single loser. There's 1250, 1000, 1000, and 1044. That's 4294 in extra income during the month of June as the market continued to rally. Now, for some of us, $4,200 in a month could be life-changing money. Maybe it's certainly just, I'm happy I'm making money in my accounts. I'm growing my accounts, whether it's retirement, cash margin, side hustle money, whatever. But maybe for $4,200, it seems it's moving the needle, and maybe others it's barely noticeable. But doesn't matter where you stand. I sure like winning trades. I sure like making money. I like moving the needle in my day-to-day life. I'm sure you do as well. So catch up on some bills, replenish your savings, or even surprise the family with a weekend getaway. Be fun, right? Now, just to recap, we're talking 16 trades back to 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 back. Several months of trading, same time, same place, like clockwork on Mondays, and we have a $1,000 a week goal. We got paid around $1,000 each week. So this is why I call it weekly windfalls and waterfall income, because these results can really snowball and make a big impact over time. So those 16 examples, we have almost $20,000 in 4 months in the bank, in our account, cash money. So we annualize that out. We're talking about almost a $60,000 raise, whether it's our trading account, whether that's like picking up a side hustle job, whether that's a raise at work that maybe nobody's getting. So, how many of us got a $60,000 raise at work last year? Probably not very many of us, right? Everyone's talking about the peanut butter raise, which is maybe across the board. They're just making everyone like, oh, we'll give you 1% raise. That's less than inflation. Okay. So anyway, with the success rate over 550 weeks with this trade, silky smooth, even through 20+% corrections, we're not taking a lot of losses. Okay. We've had 116 winners on live trades. I think we're at 116 for sure, possibly 118 if this goes to the 130 expiration we had last week, because we had 2 winning trades. So you might be thinking, could you even lose? If there's hardly any risk at all, could you lose? Yes, obviously. It's not perfect. Of course you can. Nothing's guaranteed in the markets, and that's why we should never invest more than we can afford to lose. The one thing I always stress in all of my classes is risk versus reward. If you are not comfortable placing a trade for the said risk, then do not place a trade for that said size. Trade amounts that you're comfortable with. We should win all of our trades. As many trades as I can muster. If I can win 100 some of trades, I'll be happy. But the reality is I'm winning 94.5%, 95%. So I realize that it's not perfect, but when I do take a loss, I need to shrug it off and know that the process will still pay. And we make money in the long run. We make money even short term, medium term, but the process works. Okay. So these are designed to help limit the number of losses, because nobody wants to place a losing trade. I certainly don't. I wouldn't place these trades if I thought we're going to lose. So there's a risk cutting trick that I'll share with you today. There's also, we do this every single week when we're live together. And I'm proud to say these weekly windfalls are truly the safest way. I do mean this. Like, this is truly one of my favorite retirement-based strategies. And I'm not retired. I'm long from it. But I do this stuff every single week to consistently target extra income. It's one of 2 strategies that I offer that every account that I look after gets the trade. Okay. Because I'm very picky. When I'm managing accounts, I can't 0DT day trade in everyone's account. I mean, I can't. I don't have the bandwidth to place that trade that quickly with that type of precision. But when it's something like this, where it's safe, reliable, not time sensitive, weekly trades, this is this piece of cake. I can do this for everybody. So Monday, in July, we have 1044 in extra income. Week after that, the second Monday in July, 2377 in income. And the secret behind this is in the options market. It's a little known niche in the options market. And of course, I say the word options, and some people are like, oh my gosh, options, isn't this risky? Aren't they risky? Well, the answer is sure, they can be. But most folks use them, I think, the wrong way. Most folks use them to speculate, right? Most people use options because one contract represents 100 shares of the underlying, and they leverage. That's what options are. So buying options can be risky. It's how speculators leverage large sums of money, hoping that the stock moves the right direction over a certain period of time, and you need kind of that quick fix. You need that quick hit, really aggressive price action. We don't need that. Problem is when most people buy options, are not typically getting the payoff, right? So here's a scary stat. Most of the time, People that buy options for the first time and get into this pattern of like, I buy options. Okay. Well, 90 to 95% of all your options that you buy are going to be worthless at expiration. Even if you're right about direction. Even if you're right about direction, you can still lose, which is incredibly frustrating. So that means that most buyers are completely wasting their money. If you think about it from the market efficiency side, and most folks don't realize there's another way to play the game. So options since 1973 has been a zero-sum game, meaning that when an option buyer loses, there is somebody on the other side of that trade, a seller of that option, winning. So in an ideal world, when 90 to 95% of all options are expiring worthless, it stands to reason that selling the options, you win about 95% of the time. And it's how we've seen that edge go into our favor where we have a 97+% win rate. So essentially we're doing this, and this is like the easiest layman's term I can give you, but we're selling options to speculators. So to make things simple, let's think about this like you're in Vegas, okay? So would you rather be the person sitting on the stool, pulling that lever over and over and over again, hoping to hit one jackpot for the night, right? Every transaction at the slot machine until you inevitably give it all to the casino. You know the house edge is not in your favor. But when you're selling options, you're switching sides. So you go from being the sucker that's sitting there pulling the lever over and over and again, knowing you're gonna lose. You play long enough in a casino, you're gonna lose all your money. They bank on it, right? But you become the house if you sell options, and now you're collecting money from almost every transaction. Okay, and that is why we're able to target this income of $1,000 every single week. Yes, we're risking $5K for it, but if you're risking 500, you can make 100. You're risking 100, you can make 25. I mean, we're getting 20, 25%, 15, 20, 25%. Whether it is a bull or bear market doesn't matter. It hasn't mattered. So the very next trade, third Monday in July, 1379 in income, same risk profile. Monday after that, 2081, same risk profile. In nearly 30 years of trading, I have never seen, nor do I use, a more reliable swing-based strategy. And honestly, you're not going to see this type of steady returns anywhere else. You're not. I don't know anybody in the company that's taking the same trade I am, not with this strategy. So let's say this. You have $5,000 stashed away in a high-yield savings account from March to July. So go March, April, May, June, July, 5 months. Okay. Yields, if you're lucky right now, you might be able to get 4% yield. Maybe. You're up $80. Okay. Maybe. And you're probably not because it's going to be 4% annualized. So you're not up that much. What about the S&P 500? Even if the S&P is crushing it, you're up $430. But with the same starting stake in the weekly win